Hi, I'm Amber Kardosh with @Properties Christie's International.
I'm Neena Vlamis, CEO of A&N Mortgage.
So how are you feeling the market is with buyers? The buydown, I found that people are asking for that more right now. Are you seeing that a lot?
Absolutely. So there's a 2-1 buy down and a 1-0 buy down. So a buy down means that you have your note rate. Let's say your note rate's at 7%. And you wanted to do a 2-1 buy down. You can buy down the interest rate 5 for the first year, 6 the second year, and then it would go back up to your note rate. What it is it's subsidy that goes into an account to pay that principal and interest, and it's been helping a lot of buyers feel better about purchasing.
So if they don't need it and the interest rates naturally come down, what happens to the money?
It's a great question. The money gets refunded off of the loan amount when we go to pay off the mortgage. So you do not lose that money, which is a big deal, because you don't ever want to get a credit for something and then not have access to the credit.
And what are some of the loans that you're seeing as far as the product? What are people leaning towards more so now? Interest rates are going down, but what product seems to be the lowest? Or I guess it's case by case, but are you seeing like more jumbos, more?
We're seeing a lot of 30-year fixed mortgages, which is always a safe version, and adding that 2-1 buy down to the product so that they feel better about going from renting to owning and not having a huge increase or payment shock.
Yeah, this market is tricky. I think the inventory is low in most places still. And what's interesting is I have had to actually knock on doors recently, randomly. I was actually down off the steps, waving to them, throwing rocks at their door till they opened. I didn't do that, but I did go to them and I said, hey, are you looking to sell? I have buyers that are looking in this area and there's nothing on the market. It's actually worked a few times. And I found myself doing that recently. Do you feel that the buy down is still a competitive product to use in this market?
Absolutely. It's
have
a
you
great
found
product.
that people trying to use it actually have?
Oh, they've had great success. Absolutely. It's a great way, and it's been around for a long time. It's just more common when payments are too high for somebody, and it eases them in. A lot of buyers will say, okay, well, I know I'm getting a pay raise. I know I'm going to do better in my career in a year or two, so I'm going to be comfortable with that payment.
So what do you think is going to happen to all the interest rates and all the things with the election looming?
So typically when there's an election, your gas prices go down, interest rates go down. Every 4 years it seems that we're having a refinance boom. So that's what's going to happen. Rates are going to decrease.
But do you think it's going to decrease enough that the refi boom is going to happen? I mean, most people have 3% or even less from COVID.
So during the COVID houses, right, the rates were very low, but a lot of people are outgrowing those homes now and they want to move up. So you don't want to be stuck just because you have an interest rate of 3% that, you know, you're not going to move on with your life and take the upgrades that you deserve.
That's a good point.
People deserve to have a home that they love going home to.
I need to buy a new house.
You do? You don't love your house anymore? Didn't you just do a lot of renovations?
I did, but I need a new one. It's good to change it up.
I know a good realtor.
I get bored easily. I do too. She has nice hats.
Yeah.
So I've been to a couple inspections and I'm scratching my head because I've been on the listing side because I do go to my inspections as a listing agent. It is open to debate whether people agree with that or not. I think it's great and there's a lot of reasons why. But a lot of times, buyers are there just sitting there for hours because, when you're at a single family home, you're there for 2 or 3 hours. And I always tell my clients to pack a snack because it's a long time. But instead of sitting there, you could be measuring. You could be measuring for furniture. Your intent is that you're buying it. And a lot of people hesitate on doing anything because they're like, well, I don't know what the inspection's gonna do. But why it's important to actually do those things if you know you're gonna need to do it is because a lot of times attorneys negotiate extra visits in, and sometimes it's not said, and agents will reach out and say, hey, can my buyer come in and measure? It's an inconvenience to sellers, and asking them to come in for 30, 60 minutes again is just a huge inconvenience. So one tip in the inspection is to measure. Pretend that everything's going great so that you have everything ready to go. Buyers need to know that if something comes up that's actually a major issue, maybe the seller didn't know that there's a water leak that they didn't know was happening, or there's mold behind the wall or something, you could still go back at them and say, hey, we didn't know there was going to be this major issue. And a lot of times sellers are going to concede to fixing because they don't want to live with it either. So just keep that in mind. As is very helpful when you're presenting offers right now in this crazy market because it's allowing the seller to know that you're not going to ask for concessions, nickel and diming over something little. But just know you can still negotiate and come back if there's a major issue because it's important to know that that is a key factor when you present that in your offer.
As is properties were big in 2008 and 2009 after the foreclosures and short sales started to occur. So as is in today's market is much different than it was before. As is on contracts was typically a red flag to an underwriter because they knew what the market crash was happening, and a lot of people had taken things out of their property and destroyed the property because they were angry that they were losing their home.
Yikes, 08 was a terrible year. I'm glad I wasn't in the business
Then.
Just kidding. But a lot of times too, appraisal gaps. Are you seeing those a lot with contracts that you're getting?
Our appraisers are all local to the communities that we're in, so we haven't had any issues with appraisals not coming in at value. An appraisal gap means that the buyer is going to pay that differential of 50 grand and not worry about the value of that appraisal.
And appraisal gaps are very helpful when you're in a competitive scenario with multiple offers. However, agents should make sure they're doing their due diligence on the back end and pulling comps and giving the hypotheticals like, yeah, you're going 5, 10 over, and yeah, it's not appraising, but you're going to be okay, because you also want to ask the questions, how long are you going to be in that house? Are you going to be in it? Do you think you're going to be in it? No one knows for sure, but 7 years, 10 years, because if you're only going to be in there a few years and you're overpaying for a property, chances are when you go to sell, you can't be shocked that you're going, wait, I can only sell it for what? So that is something to consider. They are helpful in competitive situations, but you want to make sure it's a smart thing to do depending on what you think you're going to do in the future, near or far.
I had a buyer that purchased a property for $2.8 million and the property appraised at $2.4 million. She still wanted to proceed with the property and she closed on that one because it checked all of her boxes, which is really important. She didn't have to rehab anything in the house. And the other properties that she was seeing around 2.4, 2.5 needed about $400,000 in upgrades.
Yeah, and sometimes it does make sense. And I think a lot of people who did the appraisal gap back in the early days of COVID, they actually came out ahead, because I have a lot of clients who are actually selling after 3 years for various different reasons, and they're lucky enough to actually still make money even after overpaying. But going forward, as the market shifts, and we don't know what the next upcoming years are going to look like, but it's just important to do as much due diligence before you decide to make that part of your competitive offer.